Thursday, May 10th, 2018, Monaco 64, home of alternative economics and contrarian views. So I want to look at the commodities market today, and I want to look at the UK yield curve. I've gotten a lot of comments from viewers, subscribers, asking what's going on, why the UK yield curve is inverted, and if that's really important. And I'll clarify that for the viewers. I'd also like to thank everyone who has donated to the channel, who's bought the Billy merchandise, the mug and the t-shirt. I've got a new design. The details are below in the description. So it's just before 8 a.m. This morning in London. I'm going to start looking at the markets as usual, see what they're doing this morning. So spot gold still very steady. Going nowhere really at the moment. 13.1270 up about, well, basically unchanged. The range has been 13.11 to 13.16. Silver as well has been kept around 16.50. It's at 16.51, up 3 cents. Range has been 16.45 to 16.56. The Dow up 42 at 24,568, up 0.17%. The S&P is up 4.5 at 2,701.37, and the Nasdaq is up 15 or a quarter of a percent at 6,906. Currency-wise, yeah, we're seeing the dollar weaken a little bit against the pound and the euro, but it's a little firmer against the yen. Cable is 135.63, or the pound, up 16 pips, or 0.12%. Euro is up 21 pips, or 0.18% at 118.72. And the dollar is up 0.14% against the yen, 109.90. Crude oil continued to trade up here. The WTI is at 71.78, up 1%. So before I go into the commodities, quickly to the 50-year gilt yield and the 30-year. Some people are saying, oh, is this big news? The UK curve has inverted. Is this a bad sign? Well, sorry to burst your bubble, but it's not news. Look at this chart here. This is from marketwatch.com, the 50-year gilt yield. The chart below gives you the UK yield curve. The black line is 1 year ago. The blue line is current. And you can look, and if you you look at it, the UK yield curve was inverted already a year ago. Not the whole curve, just from 30-year to 50-year. Excuse me. And why is the 50-year yielding less than the 30-year? I would say it's more because of pension fund needing to lock in higher yields. They've had to go right out the yield curve to match their liabilities in terms of yields, especially seeing that shorter term yields are so low and near to zero. So that's what's happened. But it's not big news. As I said, a year ago it was already inverted, the 30-year to the 50-year. And the 50-year gilt is not a huge issue in terms of size by the UK government. So what else? Bond markets, in terms of the US, the 10-year has come off a little bit this morning. It's at 298, and the 2-year yield, though, has remained above 250. So there the curve has continued to flatten a bit, bearish flatten. Okay, commodities. I'm not going to talk about the geopolitics, but that's clearly one of the reasons people are giving for the move up in the oil price. And first of all, I want to look at the oil price and then look at the CRB and compare the CRB to the gold price as well. So here's a chart of oil. I brought a very long-term chart here, a monthly chart going back to the beginning of the century, basically to 2001 or so. And you can see the big move in oil up almost up to 150 just before the crisis of '08, and then the huge collapse in the oil price from 147 to what was the low, $32, and then it rebounded, stayed between like 80 and 100 for a few years from 2011 to basically 2014, and then it collapsed again and bottomed in the beginning of 2016, ended 2015 basically. And that's when, and gold and a lot of commodities and silver, they bottomed in December of 2015. And so oil has been going up since then, and it's accelerated recently. I personally think, yeah, there is geopolitics going on, but markets move when they need to. So what are the key levels here? Well, I've done a retracement analysis of Fibonacci from the all-time high in 2008 to the low in the beginning of 2016. I usually would have taken the low in 2008, but well, the low really was 2016 at around $27. So if you do a retracement analysis, you get 73.30 as the 38.2% retracement of that move. So I would expect to see some resistance here between $73 and $75. Why 75? Well, it's one of those kind of round numbers, like 25, 50, 75, 100. So that sometimes provides a kind of a mental block for the market. But then that trend line is very interesting. That's coming down, and this month, for example, is just below 80, and then next month it gets lower. So yeah, oil, will it break out above that line? Will we see further moves up? We'll have to keep an eye on it, and I think it will be important for the precious metals, because even though precious metals have rallied since the low in December 2015, gold has gone from 1,047 to over 1,300. They're still subdued. They're still under key resistances, and people are getting very frustrated. Some people think it's going to break out. Maybe this is what's going to give precious metals the push. So let's have a look at the, first of all, I'll look at the Thomson Reuters Core Commodities CRB indices. And the one I'm going to look at is the Thomson Reuters Core Commodity CRB Index. So it comprises of a basket of 19 commodities with 39% allocated to energy contracts. So oil is an important part of that. 41 to agriculture, 7% to precious metals, and 13% to industrial metals. So that's what I'm going to look at. This is from Thomson Reuters. The other thing I would say is that for other countries, especially the emerging market countries where we're seeing a bit of currency turmoil. And what do I mean by currency turmoil? Well, Argentina, the peso there has gone down quite a bit. In Brazil, the real has gone down. With commodities creeping up, that makes everything more expensive there as well. Is that what is oil prices going up the cause of inflation? A lot of people in the mainstream said that. I remember in the 70s when I was growing up, that's what people said. It was that oil caused inflation. But I'm not going to be fooled again. It's money printing that causes inflation. The only reason why we haven't seen higher price rises in the commodities is that people have gone to financial assets in the last few years. So does it mean that are commodities going to go back down if the economy slowed down? No, not necessarily, because you got trillions and trillions of dollars that were created out of thin air into financial assets. And if interest rates keep going up, a lot of that money is going to flow somewhere else. And even if you get a small, not a significant fraction of that money going to commodities, it could affect it greatly. And then they get, you know, politicians, central bankers, mainstream economists are going to say, oh, oil caused the inflation. But don't be fooled. So I've done this chart on Bloomberg, and you can compare the commodity, CRB commodity index to gold. So, and you can see that we're just starting to break out. The CRY or the CRB is the black line, and you can see as well that gold has outperformed since the end of 2015. It has outperformed the CRB index. So we need the rest of the components, especially oil and energy, to start making a move, also the agriculturals. And this is from May, it's a 5-year chart, so it's May 2013. You can see that gold is still down from 5 years ago, but the CRB is down even more. So I think, yeah, we need to keep an eye on that, and oil, of course. If you enjoyed this video, please like, share it, subscribe to my channel if you haven't yet. You can also follow me on Steemit, DTube, and on Twitter, and I'll talk to you later. Take care.